This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russia remained China's top oil supplier in March, data showed on Saturday, as refiners snapped up stranded SOCOL shipments. China's imports from Russia, including supplies via pipelines and seaborne shipments, jumped 12.5% on the year to 10.81 million metric tons, or 2.55 million barrels per day, BPD, last month, according to data from the General Administration of Customs. That was quite close to the previous monthly record of 2.56 million barrels of oil per day in June 2023. 7 Russian tankers under sanctions offloaded SOCOL cargoes in Chinese ports in March, as Russia worked to clear a glut of stranded supply in the wake of tightened U.S. sanctions.
Oil prices fell on Monday, dragged down by a renewed focus on market fundamentals as Israel and Iran played down the risks of an escalation of hostilities in the Middle East after Israel's apparently small strike on Iran. Brent futures fell 67 cents, or 0.77%, to $86.62 a barrel by 0415 GMT. The front-month U.S. West Texas Intermediate crude contract for May, which expires on Monday, fell 63 cents, or 0.76%, to $82.51 a barrel, while the more active June contract dropped 64 cents to $81.58 a barrel. Brent crude prices failed to retain its initial surge, with broad expectations that geopolitical tensions between Israel and Iran may fizzle off given Iran's tamed response, said Yeep Jun Rong, market strategist at IG.
Moving on to the top news in the energy sector.
Plentiful supplies of some of the biggest crude grades are limiting the impact on benchmark oil futures prices of conflict in the Middle East, according to analysts and traders. Brent crude futures briefly topped $92 a barrel last week, the highest since October. While that's bad news for governments struggling to control inflation and high fuel costs, it could have been worse if physical supplies were tighter. To date, the conflict has not had a big impact on oil supplies from the Middle East, the world's top producing region.
The Biden administration took steps on Friday to limit both oil and gas drilling and mining in Alaska, angering state officials who said the restrictions will cost jobs and make the U.S. reliant on foreign resources, but pleasing environmentalists. The measures are aligned with President Joe Biden's efforts to rein in oil and gas activities on public lands and conserve 30% of U.S. lands and waters to combat climate change. The Interior Department finalized a regulation to block oil and gas development on 40% of Alaska's National Petroleum Preserve to protect habitats for polar bears, caribou and other wildlife and the way of life of indigenous communities. Next, we have the top news in metal markets. Russia's coal shipments to China fell 21% in March, dragged down by sanctions and import tariffs, customs data showed on Saturday. China's coal shipments from Russia fell to 6.92 million metric tons in March, its General Administration of Customs said. The shipments of Russian coal to China, which began to surge in 2022 as Western nations cut off trade with Moscow over the war in Ukraine, have been hit by recent U.S. sanctions on top exporters Souk and Michel and China's reinstated import tariffs of 3 to 6% this year, forcing exporters to cut prices.
Iron ore futures prices ticked down on Monday, weighed down by diminishing hopes of more stimulus in top consumer China, high portside stocks, and risks of possible government intervention after a price rally last week. The most traded September iron ore contract on China's Dalian Commodity Exchange ended morning trade 0.52% lower at 862 yuan and 50 fen, $119.08 a metric ton, following a rise of more than 5% last week. Iron ore prices will likely consolidate in the near term as uncertainty lingers on how much hot metal output can rise further, analysts at Everbright Futures said in a note.
We will now look at the top news in the agricultural sector.
China's soybean imports from the United States fell by half in March from a year earlier, and corn exports also plummeted, as buyers favor more competitive supplies from Brazil's hefty harvest, data showed on Saturday. U.S. suppliers face stiff competition for global export sales from South America, which have reported plentiful harvests and offer more competitive prices. China imported 2.18 million metric tons of soybeans from the US in March, according to the General Administration of Customs. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.